Balance your trading strategy by adding futures. CME Group helps you manage risk and capture opportunities in all market environments. Capitalize on around-the-clock access to highly liquid global futures and options market across all major asset classes. Just visit your online broker and get started. Plug into valuable educational materials and trading tools and see what adding futures can do for you at cmegroup.com/on-the-tape.
Dan here. Welcome to the podcast version of Trading Spaces. Every Monday and Wednesday at 1 p.m. Eastern, Guy Adami and I host a live Q&A on Twitter Spaces. We talk about everything from tech to crypto, rates to commodities, and have some pretty cool guests drop by. So check us out every Monday and Wednesday at Trading Spaces on Twitter and hit follow in the podcast store. So if you miss us live, you can listen to us later. And if you like what you hear, check out our podcast On the Tape that drops every Friday morning with our co-host, Danny Moses. All right, it's 1 o'clock.
I know.
I'm Nathan. You're Guy Adami. We do Trading Spaces every Monday and Wednesday at 1 p.m. It's sponsored by CME Group. CME Group is the sponsor of our podcast called On the Tape that drops on Fridays. We do that with our good friend, Danny Moses. Danny was on the podcast or on Trading Spaces with us on Monday. We had a fun talk about markets. They were trying to kind of find their footing, Guy, after a really ugly Friday afternoon. It looks like you've been using this word a lot. I think you really like it. It's like one of those ones that kind of rolls off your tongue a little bit, but it's also, I think there's a little el dente sort of thing to it. You're saying a détente. There you go.
Détente.
Give it to me. So
Yep.
What's going on here?
I mean, come on, people, détente my ass. We're getting played like a Stradivarius. And that's just, listen, I mean, we set ourselves up for this collectively. This has been in the works for literally decades, and now it's all coming to roost. So I've said it for a while, and this is not me in a vacuum, Dan, and you know that. I've been saying it since October that this shit was going to get real, and it was probably going to happen after the Olympics, so I missed it by a week. But here we are, and you know, you see the pullbacks in energy when the story seems to sort of calm down a bit. You see it elevate back up when fundamentals come into play, because that's really what's been driving it in the first place in terms of oil. And I think the geopolitical risk is not being taken into consideration in the market. And oh, by the way, Dan, there's still that potential for China and Taiwan to heat up post-Olympics. So it's a bit of a shit show out there, I will say. And again, I think the market is extraordinarily vulnerable. I know the last 2 days have been great. If you've been long, good for you. Today, not so much.
Not so much. Well, it's just, listen, it goes back to, you and I've been doing this a long time. And most of the time, you know, these sort of geopolitical events, they don't end up being huge market events unless they're a huge surprise, Guy. I mean, like that's the one thing, you know, I would say about that. So, you know, unless there's some full scale invasion and then there's crippling, you know, sanctions, and, you know, I just don't really see it being a thing. Now, one of the things I do see is that exasperating, if you were in the camp that you thought we were going to get to kind of peak inflation and we're going to see some of the supply chain issues kind of mitigate over the last, you know, or over the next couple of months, well, then that gets pushed out, right? And that's actually the story of 2021. Guy, what are you doing with your thing, man?
I'm not doing anything. I'm literally not doing anything. If I could take a picture, I'm sitting here talking into a phone with my reading glasses
I
on.
mean, but that's the story of 2021, right? Is that, you know, we were supposed to be, the vaccines were supposed to roll out, the global economy was expected to reflate, we're going to get back to the office, get back to normal, and then Delta, right? And then we saw what happened to kind of Q3 GDP. And then again, in the fall, it felt like it was all systems go. And then we had Omicron, you know, and then Q4 gets clipped. Q1 is getting clipped here. And I think, you know, if we just have these little mini events that we're never going to get or maintain that like +3 or 4% GDP that people think is going to happen in 2022. And then we go back to the whole idea of, you know, growth goes back to where it was pre-pandemic, or it just kind of is on its way back towards that 2.2% average that GDP, you know, average of the 10 years prior to the pandemic. But maybe a lot of these, and you've been saying this, wage increases stick. Some of this other stuff as it relates to the dislocation in the energy market, those input costs stay high, and maybe that's like what happens in 2022, and that would be bad for stocks.
I agree. And what we haven't even brought up is the fact that every time we get these economic numbers, it reinforces my belief that you have a Federal Reserve that is done an about face, and regardless of what happens in the market, within reason, and regardless of what happens geopolitically, within reason, they're going to continue the course that they're on. And again, I say this, it's important to say it, but there's that mantra, the David Tepper mantra, that, when the Fed is easing and adding liquidity, if you're bearish, you are effectively fighting the Fed. Why would you want to do that? Well, if that stands true under those circumstances, it stands to reason that when the Fed's doing an about face, if you're bullish now, you're effectively fighting the Fed, and you can't have it both ways. So, the game has changed, I think, at least for the foreseeable future. And I think we're still in this paradigm where rallies need to be sold as opposed to dips needing to be bought. Just my opinion, Dan.
Yeah, I would say that, yesterday's price action made sense given what happened on Friday, but the fact that they really weren't able to make back all the losses from Friday was kind of troubling. I would say that a lot of the single name volatility that we're seeing today is really bad, right? So like I don't really give a shit about this company called Upstart that's up 30%. I don't even know what they do. I guess that's the name where you remember that the guy went on TV recommending it a few months ago when the stock was literally like north of 300. He didn't know what they did. But that stock's up 30%. What I think is more interesting in almost the same space or some sort of fintechy sort of thing is Toast is down 17%. I'm seeing Roblox down 25%. I will tell you that was the R in my AARP trade that I introduced on Fast Money at the end of last year. That didn't work out well. That is
Well,
an
it's still
homage to
early.
you. I did have Amazon and Airbnb as the two A's, and those are doing okay here right now. But so some of that, Shopify. This is one you and I were talking about this earlier. This stock is at 730, and I'm just going to say something here, people. This is down $1,000. We don't usually quote in points here, but I just said it's trading at $730. It is down $1,000 since its highs, all-time highs in November. Talk to me about that guy.
It's remarkable if you think about it, and it's still $100 billion. It's still $100 billion company, Dan, Nathan. So where can it go if you really want to get into it? Well, it can go down basically to $550, which was the all-time high before everything crashed in February, March of 2020. And again, you can make an argument, oh, maybe the fundamentals, but these stocks just went up regardless. In terms of valuation, nobody cared, and now everybody seems to care. And you see how precipitous this drop has been. I mean, you just said it, Dan. It's down $1,000 since November 19th. It's a pretty significant move. And I'm glad you brought up Upstart, because that dipshit, and so I hope he's actually on this Twitter Spaces. The guy that went on with, I think, Tyler Matheson, and it was in the
Yeah.
height of the whole meme shit. And he's all I love Upstart here. And Tyler said, well, what do they do? And he said something like, "Why I can't hear you? The signal's breaking up." I wish he just said, "I have no effing idea what they do, but I think the stock is going higher." At least it would have been honest. But that is so endemic of what's been going on now, literally for the last 2 years, and that infuriated me. I can't even tell you how much, and to the point where I had to go into my garage and beat the shit out of the heavy bag. Back to you.
Real, I did not know you had a heavy bag. Have
Yeah.
you ever had to do that about anything related to me or no?
No, absolutely
So,
not.
the one thing I'll say, Guy, is that this company, though, like, when that guy was trying to talk about it, but didn't know what the hell he was talking about, um, you know, down where it is right now, down from 319 to 143. Granted, it was like 110 yesterday. I'd say it trades about 9 times sales, Guy. It is a profitable company. They're expected to do over $1 billion in sales this year, and more than 200 million in net income. And price to earnings is fine. It's a little expensive, but it is a growth stock. And some of these things are getting to points where they might make a lot of sense. And I think that's probably what's going on here. I'm sure there's a heck of a lot of short interest, and we have a stock that came down that far. It doesn't take too much of good news to get a short squeeze going. Shopify still trading at 15 times sales. I would say that's maybe a bit expensive for a company that has, a $95 billion market cap, and where their sales are decelerating. There was one though, I really want to focus on this one because Joe Wiedenthal had from Bloomberg, who I like a lot, and I think he's a great follow, and he's got a lot of smart stuff. He posted a chart this morning, and I think like he's in this cabal. They like to say chart fouls, or you know what I mean, like chart
Cabal. That's
crimes.
such a great
Yeah,
word, by the
it's a
way.
good word. It
Cabal.
seems more devious than I meant it to be, so I don't mean to make it sound like that. But it was one of the hotel chains. It was like Marriott or Hilton over the last 2 years, and how they're kind of met. Zoom, was just took off, right? Upper left, bottom right. That was upper left, bottom. It was the opposite way. But they met in the middle here. And when you look at a Zoom, it's a great company. I've been on 3 Zooms already today. I don't know how much I pay, probably not a whole heck of a lot. And I'm in an office where it's starting to populate a bit more, but I think people are going to be using it for a while. Look at where that thing could go. If you go back to 2019 or early 2020 when it broke out above 100, and that was the prior high from 2019. I mean, this stock's going back to 100. So if you're like think that this is going to be like here to stay, and I do, I just think it's going to be part of a broader platform. It's going to be a feature. It's not probably going to be a standalone company. But this stock, you have 30% more downside probably. I mean, and that's the lesson that I took away, Guy, from.
Dan must be getting a phone call. See, he makes fun of me, and meanwhile, I'm the one that figures this shit out, or we lost Dan, or something happened. Let me just say this about Marriott. I don't think Marriott is making a new all-time high today. Let me repeat, Dan Nathan.
Yeah,
Marriott, symbol MAR, is making a new
yeah.
all-time high today. Just think about that for a second. And I will tell you, at $181 is where it's trading right now. The prior all-time high before the pandemic was about $150. So think about where that stock is in relation to where it was before the pandemic started. It's remarkable, which is why Airbnb is your A, along with Amazon and your ARP. It also happens to be my A in my dawn trade, Dan Nathan.
Yeah.
Back.
Well, I mean, I'll just say this though. It's like I'm not dying to buy even the stories that you like here. The like you like the Expedia and the Live Nation and some of these things that obviously if we here's another thing I keep hearing. Everyone is really willing to do this again. They're saying the pandemic is over now that we're having a lot of the restrictions finally really being pulled back. I think Omicron having burned through a large part of this planet, people feel pretty comfortable with that. I will say is that we felt that comfortable back in September and October. I don't know about you guys, but I felt like it was over. But I guess what's not over to me, and I got cut off before, is that the lessons that I learned from the financial crisis and then the dot-com implosion was that when you think things have just gotten too bad, you know what I mean, so bad it's good, or they can't go any lower, they go lower. You know what I mean? And and
Mm-hmm.
and and those points on the charts, I just mentioned that one in Zoom, that all-time high in 2019, the breakout level in 2020, this move from 100 to nearly 500 and then back to 140. There's no reason why that shouldn't round trip. And you could say, well, it's so cheap, or it's gotten cheaper, this and that, whatever. Well, cheap gets cheaper. And just like it overshot to the upside, way overshot to the upside, it did to the downside. I guess the other thing I'd just say, guys, is like, we've been harping on this for months and months and months, but it is the deceleration is the thing. You know what I mean? You could say, well, they're still growing at 30% revenues and they still have 80% margins and they still have this. But what is the rate of change? How much are they decelerating? And that's what's going on with like the Shopify. That's the other lesson, you know what I mean, that in Roblox and stuff that we've learned over time. People just forget them, I mean,
What's interesting, it's important you said this, and I'm not looking to get too stock 101 shit here, but you say sometimes stocks do get cheaper in terms of the absolute price. In Roblox is obviously cheaper in terms of price than it was, but sometimes stocks go lower and they're actually more expensive than they were when they started in terms of an earnings release and stuff. So I think sometimes people confuse cheap price with a cheap stock. And I will tell you, because we've been doing this for a long time, sometimes the lower stocks go, literally the more expensive they get on valuation. It's just something to keep in mind. But you brought up Expedia, so I might as well bring it up. Another new all-time high today, Dan, 217 and change. Of course, that was the E in the hope trade of 2021. Back to you.
All right, let's talk about Nvidia here, because this one to me,
Yes,
all right,
let's.
this one to me, okay. They report after the close today. I think the options market is implying like an 8%, 8.5% move in either direction. Yesterday, the stock was up 9%. Stock is down 12.5% on the year. It's down from 346 to 257 from its highs in late November. And this is one to me, with a $643 billion market cap. I've never seen, first of all, there's never been a semiconductor company that has had a market cap like that. I don't think. I think maybe Taiwan Semi is a bit below that, but Intel never has. AMD obviously certainly has not. Qualcomm has not. So when you look at this company, and every fucking buzzword over the
Whoa,
last
whoa.
10 years, you know what I mean? Like this company, the stock has had these like kind of rips, you know what I mean? Whether it was crypto mining and 5 years ago and AR and VR and autonomy. I mean, the list goes on and on, data center and gaming and, all this shit, right? And so I look at this stock and I say to myself, listen, great company, great products, great management, that sort of thing. But like, this is not on the company or anything. This is on investors. This stock trades at 24 times sales. I mean, I don't know if I've ever heard. I mean, I don't know if there's ever been a semiconductor company, north of $50 billion in market cap that's had a price to sales like that, 20 times next year, 50 times earnings. So if this company, if they were to guide lower, I mean, this stock is dead. This stock's going like straight to $200. I mean,
Well,
I'm
if
just
they
curious
guide
your take
lower,
on that.
you're right about that. If there's some sort of fugazi guide, as they say, that's going to be a problem. I will tell you, Dan, that the first stop should be about $225, which was a prior all-time high way back in September of last year, if you want to go back and take a look. So I'll say that. But to your point about being expensive, stock trades at 49 times next year's numbers. You probably do have 25% EPS growth. But if you don't see the commensurate revenue growth, to your point, that's going to be a problem, I think. So 225 is sort of where I'm looking at here. And we talked about it a number of times over the last week and a half. I think we did it on Market Call, if I'm not mistaken.
Yeah, we did, Guy. Last night at 5 o'clock. We're going to do market call again tonight at 5 o'clock. You can find it at MKT Call on Twitter. You can find it at Guy and my Twitters. It's going to be broadcast on Twitter, on YouTube Live, and of course our friends at Open Exchange. So check that out. I mean, I would just say this is like when you look at that like price to sales and the PE, and you look at that revenue growth, that's great, but it's not a software company. I mean, this is a company that's got 67% gross margins, which is fantastic. But normally you'd look at a company like that with a price to sales like that, with a sort of growth that you'd be okay paying. That multiple of sales that would have north of 80% gross margins. I mean, that's just my 2 cents. Let's talk about. You said this to me earlier, Guy. We're looking at a bunch of these big names that are, a lot of these names that are reacting very negatively to earnings, and you're like, why is the S&P like, why is it right here? Like,
That's
why is it?
that's that's the rub, Dan Nathan.
So
That's
talk to me.
exactly it. All these not all these terrible releases, all these stocks that have crashed, and I'm not just throwing that word out there. I mean, there are dozens and dozens of stocks that have absolutely crashed in a technical definition. And you have an S&P 500 that at 4440 or thereabouts, is only 8.5, 9% ish from that all-time high we made seemingly just a few weeks ago. It's pretty remarkable to me, because just given all the things that I'm seeing out there, we should be significantly lower. And when I say significantly lower, I mean another 10% or so from where we are now. But we're not. Price is truth, as they say. But
I
things
hate that.
beneath it.
I hate that
No,
expression. I
listen,
absolutely
I
hate that
I
expression.
know you do. But let me tell you this, Dan, one thing that has caught my eye. Now, it's up small today, but we mentioned it yesterday on the market call as well. I think if you have nothing up on your screen but this, put the HYG up. That's the iShares High Yield Corporate Bond ETF, which really doesn't trade in that big of a range, but it's beginning to roll over in what I think is a pretty meaningful way. And I think that's something really important to look at if you want to get the health or the potential health of the credit markets. By the way, I think those numbnuts at the Fed, HYG was one of the things that they had bought as well, which makes zero sense. But there you go.
Yeah, I mean, just the optics of kind of maintaining that.
The
I mean,
optics are awful. The
Yeah.
optics are awful, but that's for another
Well, you and I kind
market
of
call.
we spoke about this a little bit too. I think it's interesting when you think about so you've had this huge, this rapid rise in rates. The 2 years gone from what, like 50 bips to 1.5% in just a matter of months. 10-year has gone up, 1.5 to 2%. It hasn't been 2% since mid 2019. And one of the things that you and I were saying is like, well, just look at the Russell 2000 and just look at the relative underperformance there, and you say to yourself, okay, well, that makes sense. I mean, to me, the underperformance in the Russell small caps, and you look at what's going on, at least as far as the HYG, you'd say to yourself, okay, there's really fears that there's going to be like, we're going to see credit spreads widen here. We're going to see maybe the Fed hiking into a slower rate environment. We're going to see for the first time in a while, more delinquencies. And that was the one thing I think from the pandemic is really interesting, is that all the monetary stimulus and all that fiscal stimulus, I mean, what they're really trying to do is avoid a credit situation like we had in the financial crisis, right? And they did for all intents and purposes. But I guess your point is like, what are the unintended consequences?
At what cost? Exactly right, Dan. At what cost? Because I'll tell you, the only thing that really, I mean, you can't do the counterfactual, and I'm not looking to do it, but the wealth gap in this country continues to widen. It's never been greater. And I put it mostly, not solely, but mostly at the foot of central bankers, specifically our Federal Reserve. And they can say all they want, but they've created this. And now to hear them collectively backtrack and some of the bullshit that comes out of their mouth, it's really insulting. Not that I would make some great Fed official. I wouldn't. I'm not smart enough nor humorless enough to be one of those guys or gals. But what I'll tell you is they somehow think they can control things, and now they've lost control. By the way, you mentioned the IWM. If you're looking for a level of ultimate support, Dan, it comes in the form of about 170, which was, again, effectively the high in February of 2020 before things cratered, and the prior high in August, late August, early September of 2018. And I happen to think we're going there.
Yesterday, Guy, when we were talking about crude coming off, I think at its lows, it was down like 4% or something like that. It was interesting that oil service stocks, OIH, and then the large integrateds, XLE, those stocks opened lower. They were probably, or those ETFs were all down 3%. The stocks obviously down commensurate. But they rallied and they closed near the highs. I think the OIH actually closed up on the day.
Mm-hmm.
And
You
here you
mentioned that.
see
Yep.
these stocks kind of raging. And I thought that was pretty interesting action, relative to the underlying commodity. So is that telling you at least the oil market or energy stocks, is it telling you that we're not done? This is going back to the kind of geopolitical things. You mentioned China, Taiwan, there's also Iran. There's like a lot of things going on. That being said, I'm not going to backtrack from what I said, 15 minutes ago, that, normally when we can identify those geopolitical events, they're just not the sort of market moving events that you expect when the thing actually happens.
No, that's fair. But I also think that the reason why oil had been rallying is all this geopolitical stuff is just sort of the final piece to that puzzle. I mean, this was moving long before, and you don't have to make a but for joke, but for the Omicron announcement the day after Thanksgiving and the subsequent SPR release, I think the trajectory of crude oil would have been lower left to upper right. We obviously saw a huge move from 85 to 61 in the late fall, but here we are. And you mentioned the OIH. I actually think we've now broken out. I got to be true to my word. I thought a close above 240, we'd be off to the races. Well, we finally got that close. It's 250-ish today. And I think you make a decent argument that you can get somewhere between 275 and 280 on this thing and still have some room. So, and by the way, look at the two of the bigger names that comprise this. Halliburton and Schlumberger, both up huge today, finally starting to catch up to the underlying commodity. And it's something we've said for a while. As a matter of fact, I think at the end of the year, last year, Schlumberger was one of those names that I had talked about as being a potential breakout name for 2022, Dan. Nathan.
You really did. It was one of your names. What about
one of the
gold?
few things that I got right? That, by the way,
That's not what I'm saying.
no,
I
I
would
know.
never
No,
say
it's
that.
fair. It is fair.
So I have a wager with Danny Moses.
Demo.
When gold was trading, what, about 1800?
90,
It was
because he gave me
he's
$10.
He said 1900 before 1700. It's back very near those highs from November. Is it building a base? Is it trying to build a head of steam? Am I going to lose more money to Danny
Well,
Moses?
I don't want to say that, Dan, because I don't want to say that. But you do know that I've believed incorrectly, by the way. But I thought gold's going to break out for a while. Now, Amanda Diaz, our crack producer, will put up that chart where you see the pennant formation that is continuing to narrow in the gold market, and I think it's going to culminate with gold breaking out to the upside. I've thought that for a while. Again, it hasn't happened. But what I'll tell you is, on a day when not a lot's going on, you see a Newmont Mining having a decent day to the upside. Again, to your point about gold. So I think there's something brewing there, Dan, Nathan. And, everything lines up for gold right now.
Yeah, I guess the point is if it's an inflation hedge, a store of value, all those sorts of things, I know that obviously Bitcoin has been a lot more volatile, but just off of the recent lows, Bitcoin's rallied 30%, and this thing has basically rallied what?
I know.
It just seems like such a boring trade to me, and it doesn't do the thing that you think it's going to do ever.
Well, I mean, think about how old I am, and I'm a pretty boring dude.
Yeah.
I mean, for example, think last night I got jazzed because the friggin' Rangers were, as I mentioned, first
Yeah.
time in 2 weeks, and I was locked into that effing game. I thought it was great. Hi, Chris Moore, by the way. You should talk more hockey, less baseball. And I know you don't want to do this right now,
Nope,
Dan, but I will
don't.
mention there are a lot of Met fans out there. And do you think I feel sorry for you because there's a lockout? No. And by the time Max Scherzer pitches again, he's going to be 40 years old. Back to you.
Let's talk about Tesla here. We talked about a lot.
Yes.
We talked about a
Yes.
lot of market leaders that have kind of given up a little bit here. This one, is clearly a market leader. It's got a $900 billion market cap, which was $400 billion maybe 13 months ago. The stock was trading. What was the highs? 1275 or something like that.
1243.
1243.
That's by memory, by the way.
I know you do that. I know you do that. This thing really feels heavy, but for whatever reason, it just I don't know why we're not seeing this thing back towards $700. And again, you guys can come out and you can hate. They delivered a million cars. I mean, that's amazing. I mean, absolutely amazing, given all the bullshit that the investors have had to put up with over their the projections about what they were going to do and what they actually did. But to me, if we're re-rating things and we're just in a new paradigm, as you say, Guy, as it relates to valuation and stuff, there's just no way this stock deserves to trade where it does.
I agree with that. And this 900 level, as we mentioned a number of times, has sort of been a pivot. This was a prior all-time high going way back to early 2021. And we thought when the stock got north of 1100 late last year, I thought we would do a back and fill down. And that's what happened. And now we've sort of vacillated. I do think you're right, Dan. I think this is one that if the broader market were to break down the way I think it will, it's not going to be spared. And if you're looking for a level, I mean, as crazy as it sounds, I mean, this thing can get all the way back down to, I think, 700, 750, and still be in a pretty significant uptrend. So I think you're right about Tesla. And maybe that's one of the final shoes to drop as well.
True that. All right, last thing, and we'll get out of here.
We're going to 5,000.
We're going to start to get some earnings from retailers, and we've seen some weakening consumer confidence data last week. And I got to tell you, one of the names that I'm really focused on, well, Walmart is one. Walmart just broke down basically. It 135 4 ish had been support for a better part of the last, I want to say 10 months or so. And the other one is Home Depot. And Home Depot to me is interesting because it broke out in October. It was in this kind of long, from the spring, summer into the fall, into this consolidation. And about 345, 350 or so, it broke out. It went to 420. I mean, like literally in a month and a half. And now it's just retraced that whole move. And it really feels like it's threatening not only that January low, but the January low, it held almost to the penny to the breakout level. And I feel like, man, if any of these retailers that people, kind of felt pretty good about because of consumer balance sheets and just kind of like, whatever, the fucking inflation trade, whatever the bullshit, like, green shoots, whatever. It really feels like that's really poor guidance from some of these retailers
No, so
could be
you're
the
looking
thing.
for a level. So your levels are spot on because this 340-ish, we're really trading 346. So it's a 341 level was a prior all-time high. Go back to the spring of last year. I think it was May 10th or
Yeah.
so of last year. So this should theoretically be huge support. I think they report Home Depot on the 22nd, and it's never been of February. It's never been a cheap stock, and I think one of the reasons it's coming off like it is because now people are concerned valuation-wise. I think you're smart to mention Walmart without question. Seemingly can't get out of its own way, which is pretty remarkable. Stock has just been rolling over. And even names that have made sense and names that I've liked. But look at Dollar General. Look at those huge double tops. Amanda Diaz is going to put a chart up of Dollar Gen. You go back to August of last year. I think the stock was $240 or so. Then you go back to January, I think 7th of this year, 240. Broke those double tops, held, broke down, and now you're looking at a stock that I had loved that can potentially test all the way down to 175, which was the March 2021 low. So
Yeah.
a lot of these retailers are just broken, Dan.
Look at this. Talk about broken. I mean, Best Buy broke in November. Remember that guidance that they gave? And that stock was trading 105 and went like in a straight line, literally in a straight line to like 145 in October and November. And then it came crashing down. So from 52-week highs to 52-week lows in a matter of weeks in a range that was, I don't know, down 40% or something. That thing. I know you like Dick's, but this one is down 5% today. It feels like a lot of these big box, um, the stories are kind of done here in the near term. But I don't know. In general, I think that's going to be probably the most important single stock group, that when we get by Nvidia tonight. So I don't know.
The
All right.
one
Well,
thing, the one
yeah.
encouraging thing, not that I hate to say, I never that expression Debbie Downer. I mean, that's just a. Is it Debbie Downer because it's you can't say like Louise Downer because it doesn't make sense. Like
No.
you got to put. It's a dopey thing to say,
Yeah.
but I don't want to be a Debbie Downer. But what I will say, if you want something encouraging right now, Dan Nathan, it's the fact that the VIX is only up about 1% or thereabouts on a day where historically it might be up a little bit more. So take that with a grain of salt, as they say, Dan.
Well, it'll be interesting to see if there's any headlines that suggest, again, more to your detente sort of situation. And I will say that if the bounces become smaller and smaller, we had a very solid 2% one yesterday, and now we're, I don't know. I really feel like we're kind of in a one step forward, two steps back sort of market here. And, it just doesn't make sense, I think, to kind of, you know, uh, let's really focus on the things that the market's telling us right now. And what it's telling me is that the valuations are just, they don't make a lot of sense for an interest rate environment that we haven't been in a very long time. And the one thing I would say, Guy, and I know we can leave it on this, I guess, as it relates to the Fed. I mean, if you do get your 10% lower in the S&P 500, and this could happen before the Fed meeting in March. I mean, think about it. We're a month away from that. I think it was a March 18th
Well,
or
I
something
know
like
what you're
that.
about to say. If they backtrack because the market sells off,
Yeah.
they're a bunch of cowards, and I will use that word on this broadcast, on our podcast, and I'll use it on Fast Money because it's factually true. They should not be slave to the market, which they've been for years. They should divorce themselves of that. The same way that Mr. Gorman from Morgan Stanley said they should 3 or 4 months ago.
That's
Back to
true.
you.
Well, maybe, you know what, Guy, if they get a bit more dovish prior to that meeting because the stock market is down and not for, let's say, a great reason because there's like some big war in Eastern Europe or something like that, I think it'd be time for you to kind of dust off your op-ed pen and really write like an open
I'll
and write
dust that
and
shit
write
off.
it
I
and
mean,
write
I'll
an
go on a
open
rant.
letter or write an open letter to Jerome Powell. I will tell you this. You don't listen to it. I know that, obviously our company produces it and I'm one of the co-hosts, but OK Computer, a podcast that we launched a couple months ago. I had Rick Heitzman of First Mark Capital and Meltem Demers of CoinShares on yesterday. We talked a little Fed. We talked a little bit about the interest rate environment, what it means for private tech valuations and crypto, because obviously Meltem's very involved there. You got to listen to that one. She was on fire, Guy Adami. All
What
right,
do they call that when you're on fire? What do they say?
they call you being on fire. They're a fire emoji. All right, listen, this was a lot of fun. We really appreciate you all being
Great that your
here.
voice is back. For all you
Kind of.
baseball fans, I'm sorry. I think today was supposed to be first day of pitchers and catchers. or yesterday. Clearly, that's not going to happen. And in some perverse way, I take some glee in knowing that Met fans are chomping at the bit for a season that might not come to fruition. I know that's twisted, but that's what can I tell you?
It's twisted because you're not going to be able to watch your Yankees. All right, listen, this was Trading Spaces. Thank you guys for being here. Check out OK Computer. It's in the podcast store, dropped today. It was awesome. We also had the CEO, founder of Helium, which is a decentralized wireless network, which, Guy, you know that I have been a miner of Helium tokens for the last couple of years or so. I've really enjoyed that. And then we're going to have On the Tape drop on Friday morning with our good friend Danny Moses. So check that out. Thanks to CME for sponsoring the Spaces. Guy, thank you, buddy.
Thanks for listening to this episode of Trading Spaces, brought to you by CME Group. If you like what you heard, follow us on Twitter @Trading Spaces and join us live every Monday and Wednesday at 1 p.m. Eastern.